The Dow rising more than 200 points at one point Friday, erasing the losses of the earlier this week. However, it's sort of given back some of those gains after President Trump just announced that he's got a deal to end the shutdown for at least 3 weeks. Joining us now to talk about the markets is Ken Kamen. He is president of Mercadien Asset Management. Well, Ken, the Dow was rallying more than 200 points until then, but despite the fact that Intel really dropped, what's fueling this investor optimism on this Friday?
I actually think investor optimism is being fueled by the realization that last month the pessimism was overblown, and a lot of people that ran for the exit doors and wanted the safety of cash or the safety of their mattress just realized, well, maybe things aren't as bad as we thought. Because in my analysis, I think last year was the aberration about how much growth in earnings we had. This year is not the aberration. I mean, still getting double-digit earnings growth is still historically great earnings growth. So you don't want to be on the sidelines for that.
And with the deal, at least for 3 weeks, to end that government shutdown, what should that mean for investors? How should they take this and play it?
You know what? It's just frustrating. We're saying we're ending a shutdown, but we really didn't end the shutdown. We just put the shutdown on hiatus, and the bad narrative is going to continue. The dysfunctionality of our government is an embarrassment to all of us. The fact that we can't figure this out and people have to be out of work is crazy. And for that narrative to still be in the news is crazy. But I'm thrilled to death that people are going to get paychecks, because what's happening now is just not acceptable.
Now, Intel came out with disappointing earnings one day after chip stocks had really rallied. But Intel, the old days, used to be considered a real economic bellwether, but investors seem to be shrugging that off in terms of driving the broader markets higher.
Well, in some ways, that kind of makes sense. Their chips are already in everything. So I'm not saying that we're at full digital society at the moment, but how many more companies could they go get new contracts from? So now, as everyone's realizing that maybe not everyone needs a new phone, people aren't upgrading their laptops all the time. We've already been digitized. So it makes a lot of sense that it's hard to find new market share. Whether it's a real indication of where the economy is going, I'm not too sure. Again, because they're already in products that are causing a lot of great productivity gains. People just don't need tons more of them.
Well, Ken, based on today's action, it appears that the markets, the U.S. markets, will be able to extend their winning streak to a 5th straight week. So what should investors be doing at this point? Get off the sidelines and just jump in, or just hold off until you really get some confirmation that, hey, we've had that capitulation?
I'm a believer in always stay invested, but that doesn't mean always stay invested 100% in equities. It's have a well-diversified portfolio of which cash, bonds, and even international securities should have a good place in your portfolio. If you try to time the market, you're going to have what happened to people over the last few months. If you were scared and got out from October to December, while you were still deciding whether it was time to get back in January, you missed a 10% move in the market. So you just have to make bones with volatility is here to stay. The algorithms have taken control of the markets. We're going to get a lot more wide swings. And you just have to say, I'm not waiting for the next bottom. I know there are a lot of pundits that say we might have one more leg down. And I go, well, so what? So we'll get the leg down, and I'm not saying it comes back like it just came back in a month, but it'll be back. The important thing is stock picking makes a difference. Asset allocation makes a difference. Do your homework. Don't count on momentum to win the day for you, and you'll do fine.
So get off the sidelines, but go into what areas?
Well,
get out of what areas?
Yeah, well, I think getting out of still what are FANG names, still are the FANG names, those were the ones that were momentum were carrying everything. Amazon's not going to put every store out of business. Not everyone needs a new iPhone. And maybe everyone's decided that giving up your privacy to companies like Facebook is not what they want. But they're still going to do shopping, whether it's in a mall or on Amazon. So consumers, I like the consumer, I like industrials. I even like financials here, because even though the Fed's raising rates and the market isn't really cooperating because rates are going the other way, banks have got very strong balance sheets, and economic activity continues to be robust.
Okay, so out of FANGs, get into consumer, industrials, and financials. Thanks a
lot,
lot,
like
Ken.
them.
All right.
Thanks
to Ken Kamen of Mercadien Asset Management. I'm Fred Katayama. This is Reuters.